Initial jobless claims coming in at 298,000, so that's a big increase from the week before and a big increase from expectations. Non-farm productivity, though, picking up 1.5%. Unit labor costs moving a lot lower, actually, now just up by 0.2%. So we've been hearing this story quite a bit, that there is a labor shortage. Therefore, companies are trying to increase productivity in order to help offset any wage gains that they might pass on. Is that still the story when you're looking, Troy, at 1.5% productivity and you have a unit labor cost up just 0.2%?
Yeah, more broadly, and this gets back to your question about what they don't know, and what both the Fed and ECB and all central banks continue to not know is why wage growth has been so low, why inflation remains well below expectations. And so that's the big conundrum, right? The labor market's tightened dramatically. You've had meaningful wage gains, but not as high as they would expect. And until you get meaningful wage gains, it's really hard to see inflation picking back up. And so, again, this dovetails back to the ECB. You know, they've been below trend as well. We always look at it and say, what's the rush to remove that policy when you're still running well below not only expectations, but in terms of labor utilization in the peripheral countries?